All right, another week in the books. This is update number 5 in this account of mine and M1 Finance. Welcome back to those returning, and if you're new, welcome to this channel where I just go over my weekly activity and stocks I'm buying, and sometimes my thoughts into the stocks that I'm looking into. But before I get into it, shout out to that commenter, double asterisk. I appreciate the comments. And I'll give you my thoughts on Verizon because he asked about, or she, if it's a she, but he asked about Verizon. Um, and so I'll go over what I think about it at the end. But this is the performance of this portfolio stocks. Starting with AT&T, it's up 2.65%. Same thing with Procter and Gamble, Old Republic 2.48, Cisco 2.3, Lockheed Martin 1.86, Costco 1.69%, American Financial Group 1.5, Coca-Cola 1.47, T. Rowe Price 1.37, and Johnson & Johnson 0.18. I might pick up some more of these shares because it's dropped quite a bit, but we'll see. And then the rest of these stocks are down this week. So starting with WP Carey, 0.5%, Walgreens, 0.64%. As you can see, I have a buy order pending, $100, so that'll be executed on Monday. Then we got Altria Group down 0.94%, HPQ 1.14%, 3M 1.82%. I'm probably gonna put in another buy order for these as well. Home Depot 1.86%. This one too. What is it at? 283. Yeah. Best Buy. I do want to pick up more shares of Best Buy, but I think I'm waiting for it to drop just below my average share price of 72. Hopefully it does. Then we got Warner Brothers Discovery 2.37, and finally Citigroup at 2.58%. Some of these stocks I'm not really looking to build a bigger position. Because like I said, I think in one of the earlier videos, a lot of these stocks that I own, I kind of bought based off the yield, and I didn't really look into the financials of the companies, like their free cash flow or their balance sheets. And so some of these I probably would not have bought knowing what I know now, like Citigroup. Warner Brothers Discovery was just a spin-off AT&T, and I should have sold it when they spun off, but I didn't. So now I'm gonna just wait until I get in the green. So I'm like halfway there. But some of these other positions I wouldn't have, so I'm not gonna be adding to them. Now let's go over the activity. So I don't have anything for the 18th. Okay, on the 20th, I bought $100 worth of 3M. The share price was $103.44, so it got me just under one share, 0.966 shares. And then I also bought $100 of Altria Group, which netted me 2.19 shares, and I bought those at a share price of $45.64. The dividend from Home Depot and Lockheed Martin. And then on the 24th, I bought another $100 into 3M. That got me just over one share, and I bought that at $100.72. So that was nice. So that's all the activity for that portfolio. And then in this portfolio, nothing has changed. Apple's up 3.39%, and so is this M1 Expert Pi, up 1.28%. Again, I still haven't decided what I'm going to do with it. I kind of want to just keep it just to, I guess, compare my performance to this Expert Pi by M1, which is just a bunch of ETFs. I wanted to be more involved in my stock pickings, and I actually wanted to own the businesses. Because when you invest into these ETFs, you have ownership in the ETF, but not in the businesses that they are invested in. So, for example, this one, the top holdings: Taiwan Semiconductor, Tencent Holdings, Alibaba. All these, you don't have ownership of those. You just have ownership of the ETF, which which is from Vanguard, which has ownership of these shares. So I wanted to have actual ownership of the companies. So that's why I started picking individual stocks. But that's just my strategy. I'm not saying it's the better strategy. It definitely is riskier. And if you're comfortable with it, do it. If you're not, then just stick to the ETFs. You'll do probably better than me. But I'm sure you'll be fine. And that's it. That's all the activity for the week. I didn't go over it on this one, but I didn't buy anything. Just some dividends from the ETFs, and then just all the deposits. And now Verizon. So a commenter, double asterisk, asked me about Verizon. Well, I don't have it in my dividend account, and honestly, I already have AT&T, and I didn't want to get another company in that same, I guess, industry or sector, whatever it is. And I kind of reviewed Verizon's financials a little bit, and if I'm not mistaken, I think the free cash flow is kind of sporadic, and so I don't know how they pay for their dividend, and I just don't understand it right now. If one of you guys understands it, let me know. But I like to see the free cash flow of the business be somewhat stable, nothing too crazy, no big deviations, and I just don't see that, I think, with Verizon. So I don't know how they can sustain their dividend. And they have a lot of debt. But then again, so does T-Mobile and AT&T. But, these are like the top companies for phone service and internet. I don't really hear about any other company. So, I mean, they got a pretty good grip on the market for telecommunications and internet. So I don't think they'll go anywhere. But again, I just need to understand what it is that Verizon does that allows them to sustain that dividend, especially going forward. I mean, it's down from it's down from 18% from 5 years ago. So it looks like a nice buy, but I just don't understand it fully. So that's my thought on Verizon. But again, if you guys know something that I don't, please let me know. I'm here to learn just like everybody else. I'm no expert or anything like that. So let me know what you guys think, and I'll see you guys in the next update. Peace.